Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and before we get to the charts, you may have already noticed, obviously, that the report is coming out on Thursday instead of Friday. And the reason for that is I'm looking at the technical signals, and I am raising the caution flag based on the technicals that I'm going to point out to you here today. And so this is something that is not a recommendation in any way, shape, or form. It's basically just a caution flag. So if you're an investor, a trader, an option trader, swing trader, day trader, doesn't matter. The signals are getting a lot more bearish as we continue into the month of October, which is the most notorious month of the year. So let's get to the charts, and you can see that last week I had a two-part forecast where I had the upside target here, which filled yesterday, and then the downside target, which was 465.47, hit today. So as a result of the increase in volume, the cross down below in the stochastic and the CCI, you could see that we're just about to cross below that momentum line, the zero line there. We're most likely going to close the end of this week with a price below the 20-period moving average. And I'm going to talk more about the moving averages here as we move along. So the downside target on DIA is 461.34. Looking at IWM, you can see here that we missed that downside target by 19 cents, but I'm going to lower that target and go again just a hair below that moving average. This target from last week will most likely hit, and the downside target here on IWM is 242.60. And if you look down below, we see the hinging and pivoting of the oscillators. The stochastic is heading lower. CCI crossed with a sell signal earlier in the week. And while we don't have an increase in volume today, I think we will possibly tomorrow and into early next week. So that's IWM, again, reiterating that downside target of 242.60. Moving on to QQQ. You can see that we have a hanging man. This was another two-parter. So we hit the upside target, continued to move up, but we have a hanging man that's doubling as a bearish Harami, and we have a drop in volume on the way up. Remember, the drop in volume on the way up tells us that the buyers are losing momentum. If the volume starts to pick up on the way down, then you're going to have more motivated sellers, and that could bring us to much lower prices. So I am keeping that downside target on QQQ at 594.18. Moving right along and looking at the SPY, which is the ETF here for the S&P 500, had a downside target that just missed on Tuesday, and I think we're going to go down to that low. So I am going to maintain that target right there of 666.12. And what I'll do is I'll just put a horizontal line right there because that's going to represent where the moving average is. And I'll adjust that to match that target from last week of 666.12. Now, before we get into the VIX, let me just show you a very important reason why the caution flag is going out. If you look at this ticker symbol, and I've mentioned this so many times before and recommended that people keep it on their watch list, it's $ SPX, the letter A, the number 50, and then the letter R. This is the chart that's going to show you the number of stocks on the S&P that are above the 50-day moving average represented in percentages. So you can see right now we dropped below 50%, which means there's the majority of the S&P stocks are now starting to drop below the 50-period moving average. And why is that significant? Well, if you look at the weekly chart, you'll see here that each time we've closed below that level, the market dropped here, here, here. You can see it continues on here, here. And these are pretty significant drops. So we've got to close now just slightly below that 50% mark. So I think with the remaining month of October still hanging over us here like a shadow, I think we could see the S&P start to take a hit. And I find this to be very interesting that it is all happening on a day when, world peace is beginning to shape up. Donald Trump struck a deal. A peace agreement is in process and in the works for Monday for the hostages to be released. And we still have a government shutdown. I think that's what's putting most of the weight on the market right now, because it doesn't look like they're moving at all to open our government. So each and every day that people are, not getting paid or furloughed, that's going to put pressure on the overall economy and of course those individuals as well. You have to look at what's going on. There's a lot of pressure. I'm going to throw this in the mix while we're talking about the economy, in that the hiring intentions are at crisis levels that we haven't seen since 2011. Now, what does this mean? Well, if companies are not hiring or they're putting a hiring freeze on, what generally happens afterwards is that it usually is followed by a lift in layoffs. That's what follows next. And we don't have data coming from the Bureau of Labor Statistics. We don't have any economic data coming from the government because it's a shutdown, obviously. So when we finally get the government running and open and firing on all cylinders, there may be a shock to the system when the data is finally released, because it's not going to happen in gradual stages like we normally see. So it could jolt the market even lower and possibly surprise investors. And so keep an eye on that. Now, with this all happening, let me go back and start looking at the daily charts for the VIX. If you look at VIX, which is the volatility index, I still have an upside target on this at 21. I talked about this last week, where this is a rounding bottom. You see this? Rounding bottom, also known as a saucer bottom. That is usually what you see as a basing pattern. And so that is going to be bearish for the market, because remember, like I said, a bullish VIX is inversely related to the general markets and the S&P. So that's going to put pressure on the SPX as well. Now, before we get to the trade of the week, which is going to be a phenomenal trade this week, I want to make a couple announcements. Number one is I would like to move the weekly market report to a time after the close on Thursday rather than Friday. I'm getting a lot of requests from people that, by the time they get to Monday, they're missing trades. I think it might help the general audience if I'm putting out the weekly market report and you still have one more day to make your trades, maybe put some stops in the market to protect yourself against what could be news announcements coming over the weekend. And so it could give you some protection. So what I'm doing here today is I'm going to ask you a poll question. And if you could answer that question in the comments field below, and we'll get to work. All right. So the feedback request: yes, if you would like to see the report come out on Thursday after the close, or no, you like it better on Friday. It's totally up to you. I'm going to count the votes in the comments field. We don't have to have every viewer answering this question. I'm just simply going to go with the majority of what I see, yes or no, and we'll go with that. I'm going to leave that absolutely up to you. And the second announcement is tomorrow, Friday at the close, 4 p.m. Eastern Time, we are launching CryptX, which is the crypto trading service headed by Matt and CJ. You're absolutely going to love these guys. They're professional traders in this space. They're teaching people how to read the charts, how to use crypto, how to protect yourself in a crypto trade, and how to more or less maneuver in this, what could be a very complicated market for some people. You don't have to have money in an account. It's a free webinar tomorrow. You could just watch, listen, ask questions, and I hope you could join us. So I will put the link to that webinar in the description box below, and then hopefully you'll be able to join us tomorrow at 4 p.m. All right, so we're talking about the trade of the week, and here it is on October 1st. A trade publication went out on Critical Metals Corp. We talked about this one last week. And here it is on October 1st. A trade publication went out on Critical Metals Corp. We talked about this one last week. And October 1st, our members went in, got the trade on for $6.75. And 5 days later, the stock was up 128%. Now, this is not an income claim. I'm absolutely using this as an example for educational purposes, so please keep that in mind. And what I'm doing is I'm showing you the date of the publication, the signals that showed up on that day, and what happened afterwards. So on this candle right here, as I magnify that, that is a bullish engulfing candle. It's one of the most bullish signals you're going to get. So the publication went out on that day, and if you look down below, you can see that the stochastic was pivoting up. Down below, the CCI was already generating a buy signal, and we got into that position right there. 2 days later, it continued to go higher, and then the explosive move higher here when news was announced on this company, and Donald Trump was adding some fuel to that critical metals and mining sector, and they rallied up. Now, most of our members got out right at the high when it traded, and then you see this long shadow and it pulled back. As of today, you can see another green candle increasing volume. Now, when we trade, we're not long-term buy and hold investors. We get in, we look for the percentages, we read the signals, and then we get out. It's really that simple. And if you want to learn how to trade, come on over to StickyTrades. We've got a 15-day free trial, and you could plug into our StickyTrades University. You can watch our webinars. You can watch the recordings. You've got everything at your fingertips for 2 weeks. And then if you decide you want to stay, you can, but there's no pressure. We don't take credit cards. We don't have sales teams pounding you to join. No, it's not like that. Very comfortable experience. So if you want to come over to StickyTrades, just go to the link in the description box below, or you could look at the end screen and there'll be a link right at the last few seconds of this video. So again, thank you so much, folks, and we'll talk to you next time. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.